Hello, everyone. This is Chris Martinson of Peak Prosperity here with David Stockman. Hi, David.
Chris, great to be with you and look forward to the summit.
Absolutely. Well, I'm here to let everybody know about this summit that you and I will be delivering in New York City Sunday, September 16th, 2018. That's from 10 in the morning to 4 in the afternoon. Now, enormous changes are coming, and the risk of those changes being disruptive, if not downright damaging, is growing by the day. So this is people's chance to spend a time with you, David Stockman, former director of the Office of Management and Budget under Ronald Reagan, former congressman, author, great book, Deformation, and successful businessman, as well as myself and Adam. So David, I'm very excited to be joining forces with you and to be able to deliver this timely, actionable information to people on September 16th. Tell us some of the things you're going to be talking about.
Well, I think the world is changing dramatically the direction of the financial system. We're at a epical pivot, in my view, driven by the central banks. We've had 2 decades of just fantastic monetary expansion that fueled an enormous inflation of financial asset values in the financial system generally. And that now, it was driven by the Fed. It was supported and compounded by the other central banks of the world that felt they had to join or see their currencies appreciate too much. Now the Fed clearly has shifted direction, belatedly as it is, and one by one the other central banks are going to have to go in the same direction of QT, normalization, allowing interest rates finally and bond yields to find some, reasonable market-based level. I'm not sure they'll get all the way there, but that's the direction we're heading, and that will cause, I think, thundering shocks to the bond market, the stock market, the derivatives markets, the entire global financial system, because it's all predicated on ultra-low interest rates, massive continuous central bank, bond purchases, monetization. And this is all coming to an end, and it will mean that the law of supply and demand for financial assets, savings and borrowings and investment, will have some opportunity to be reflected in prices as we go forward. And those prices will be a lot different than what they were at the bubble peak, which I would say probably occurred, as the history books will note, around January 2018.
Well, David, so what do you think the risk here is of another 2008-style financial crisis?
Oh, I think the risk is, as great or even greater, because we have gone through, since the fall of 2008, almost 10 years of radical and unsustainable and dangerous monetary policy expansion, and therefore appreciation rates and increases in asset prices that have no basis in the ongoing flow of the domestic and global economy. In other words, there's no income or cash flow basis for prices that in the financial system that have gotten tremendously out of whack. So I think all of that is going to be, reset. There's going to be a great reset, and I don't think these markets adjust, slowly and calmly. I think, there's no bid underneath this market, and when it begins to really falter, everyone will be selling, and there's no bid below, in part because of all these structural changes we've had, the massive increase in ETFs. Maybe there's 800 billion or so before the last crisis. This time it's, as I've seen it lately, 3 or 4 trillion. And if you then look at other forms of passive investment and trend-following investment, you've got trillions more. So I think the system is just rigged for a implosion when we finally reach the point that people see the gig is up. The jig is up, I should say.
Absolutely. Well, David, I know you spent a lot of time in business, so understanding the world of finance from a corporate standpoint and in terms of how leverage is really working and all of that. And as well, you spent a lot of time observing and watching carefully the markets. What sort of things are you looking for? What signs are you looking for to know that the crisis is either imminent or maybe has already arrived?
Well, one thing I was looking for was the momentum concentration in fewer and fewer and fewer stocks, and I think that has happened in spades in the last year or two. I would just note that I call the Fangman stocks, that's 6 of them with the usual suspects: Facebook, Amazon, Apple, Netflix, Google, Microsoft, and one more. But the point is, 5 years ago in June of 2013, their market cap was $1 trillion. Last June, this year, which is June 2018, the market cap had risen to $4.2 trillion, and on the eve of Facebook's, faceplant earnings event, they were valued in combination at $5.4 trillion. Now, $4 trillion worth of market cap does not materialize out of the mist in such a short period of time. These are good companies, but they were drastically overvalued as more and more of the, flow into the stock market concentrated into these stocks, either through ETFs that own them or through just pure momentum trading, which, is basically the only strategy that really drives the market these days. So that's what I looked for, and I think maybe we reached it recently when, Facebook lost $120 billion worth of market cap in 1 hour of its earnings call. Now, if you wonder, to get a sense of how big that is, that's bigger than the GDP of the Ukraine. So that was lost in 1 hour, and Mark Zuckerberg's piece of that was bigger than the GDP of Iceland. So he lost in Iceland in the same 1 hour period. So what we're dealing with here is massively outsized values, financial asset values that are going to come back down to earth, and it was far more, extended, I think, in many different ways of measuring it, and we'll look at some, than it was either in 2007, 2008, or even on the eve of the dot-com bubble, and in the year 2000. And we're seeing the same things. Even last week, after the Facebook plunge, they were all the usual talking heads were out there saying, well, don't worry, the market is firmly supported by the moving averages, the 20-day, the 50-day, the 100-day, and it'll hit those and bounce off, and we'll move to higher levels, and this is just a wonderful trading opportunity. I bring this up, and I'm going to talk about it in the conference because on March 27 in the year 2000, they were saying exactly the same thing when the NASDAQ 100 hit 4,700. And it was well above. It was like 15 or 20% above its 50-day moving average. The confidence at the time was that that was a firm foundation support for the market. It would never change. 13 trading days later, the market was down 33%. It plunged through the 50-day like a hot knife through butter and never stopped falling. Eventually, the market ended up down at 800, the NASDAQ 100, 83% loss over the next 2 years. It was just a bloodbath that never wanted to end. The reason I bring this up is that I believe large parts of the market, including the tech sector, we're set up and are set up for a repeat of that experience. And maybe the Facebook event was the trigger or the catalyst that will generate the next go-round of this madness.
Well, absolutely. And David, very well said. One of the things that I work with my listeners a lot is how to protect themselves and how to make sure that their wealth is guarded as best it can be. And I believe there are better buying opportunities in the future. I I've been reading things about how people said, oh my gosh, Facebook insiders sold billions of dollars of stock, and as if this were some sort of crime, selling into their weak earnings. And I just say caveat emptor. Somebody was a willing buyer on the other side of that. Maybe they should have seen things the same way that you see them. So what sort of is steps that are you aware of that people can be taking, maybe should be taking, to protect their wealth here today?
I would say two things, and the historic record is so clear. You have the opportunity of a lifetime right here, and that is to get out of the casino first. There is maybe 5% of upside if we're lucky, if there's another rip, and there's 40 or 50% of downside if this correction unfolds the way I expect it will and the way economic and financial history and logic suggest it might. So the risk reward is terrible. There's no point in staying in for another 5% if you get lucky. And better to build up a huge cash cushion, because think what the historic record now tells us in an era where central banks drive bubbles till they reach the point that they collapse in their own weight, and we have these nasty 40, 50, 60% corrections. What happens is that if you get out at the top and are willing to wait for this correction to completely unfold, and stay in cash at the bottom, there's going to be the buying opportunity of a lifetime. The people who were smart enough to see, the jig was up in the spring of 2000 and get out of the NASDAQ at 4,500, 4,700, had a chance only 2 years later to get back in at 900. And that I think is kind of the essence of what's going to make sense going forward. There's nothing really very attractive to buy in the casino, as I call it today. There's every reason in the world to preserve capital and build up cash, and then to be positioned for the tremendous buying opportunities that will eventually materialize once this great reset is finally accomplished.
All right, and for everybody listening, none of this happens in a vacuum. Of course, there are political and geopolitical things to consider as well. I'll be talking about what's been happening in the Middle East vis-a-vis oil. I think there's a lot to be talking about in terms of oil. And of course, if Iran does make good on its threat, even if it's just a short abortive attempt, but if they make any sort of an effort to close the Strait of Hormuz, that will upend a world that has nearly $250 trillion in identified debt, IOUs, underfunded and unfunded liabilities several times larger than that, 4 or 5 times larger. So this is your chance to spend a closed-door session with leading out-of-the-box thinkers, receive valuable information delivered with plenty of context, and then answer your questions. David, any problem answering any questions people might have for you?
And not at all. No one really has the answers here in some clairvoyant sense, because we're in uncharted waters. We've never been there before. But if you have a sense of history, if you have some memory of what was believed to be, sound finance and sustainable economics 10, 20, 30, or 40 years ago, and I started in this business way back in the late 60s, I think you have an ability to see we're in a totally artificial, unsustainable, dangerous moment, and when you look at it through the correct lens and some genuine history, I think you can find a lot of answers about what's happening, where we're going, and how an investor can move to both protect your current net worth and assets, and ready yourself for the opportunity of a lifetime somewhere down the road.
Absolutely, and I think this is just a critical time to be holding this particular summit. We've recently seen the face plant. There are tremors running through the NASDAQ right now. Is this the moment at the top? Who knows? But that context, the history is important. David, it's almost like you're telling us it's never different this time. Is that a fair summary?
I think it's fair. My blog post last week was this time is the same, only worse. And, because each of the 3 successive financial or central bank-driven bubbles that we've had in the last several decades have been more extreme produced an even greater disconnect between the real economy and financial asset values. This was the most extreme disconnect yet, and so therefore the correction by logic and definition is going to be the worst that we've seen so far.
Well, I agree with that. And of course, this is going to be a closed door session. So for people who come, you get to spend the day with us and ask any questions that are on your mind. Nothing will be held off the table. Of course, David is very forthcoming with his words and views. So am I. But still, there's something that happens when you get in a room together and really get to chew over things. Because, David, I love the way you put it. Nobody has the answers here. It's a really fast-moving target. We've never been in this situation before globally, let alone nationally. So lots to chew on. And I don't think that you can overdo it in availing yourself of the best data and the best minds. So for more information and to register, please go to peakprosperity.com/NYC. Again, that's peakprosperity.com/NYC. You can get all the information there to register, and we'd love to see you there. With that, thank you so much for your time, David, and we'll look forward to seeing you soon.
Look forward to the summit. It should really be some fascinating issues that we'll have a chance to dig into in depth.